And Assalamu alaikum. In UAE markets this week, we've seen stocks consolidated just below 2,200 levels on higher oil prices, more improved performance in the credit markets, and some good accumulation on stocks from this time last week. The key targets for the market here now is 2,300 to 2,400 on the DFM over the next one quarter, and we think that accumulation on these lower levels is appropriate in some of our core stocks, including Arab Tech, DFM, Air Arabia, Aramex, DP World, Agthia, Do, and in particular index stocks such as Eldar, DIB and Amar. The key catalysts for the UAE stock markets over the next quarter include the Dubai bond, which is reportedly receiving strong demand internationally, also the repayment of the 3.5 billion US Nikhil bond, flowing through to improve cash flow to government-related entities and contractors in the UAE, as well as stronger oil prices, which have been averaging around 77 to 79 US dollars, which flows through to fiscal surpluses in the region, and also a weak US dollar, making these markets far more attractive for overseas investors. In local news, district cooling company Tabreed, listed on the DFM, has reported 25 million dirhams worth of profit for the 3 months ending 30th of September. This was ahead of our expectations of 16 million dirhams based on a greater number of costs being stripped out of the business during the quarter, and also lower than expected interest expenses. Our valuation on Tabreed of 1.22 dirhams per share versus last close of 95 fils gives a 50% weighting to Tabreed's net tangible asset backing, which is equivalent to 1.44 dirhams. This is in light of the improving credit and equity market conditions over the last quarter and greater demand for infrastructure assets by investors. We expect Tabreed's earnings per share to grow by 39% in 2010 and 24% in 2011. The company has a virtual monopoly on district cooling in Abu Dhabi, having tied up with key players Eldar and Saru, and is really leveraged to benefit from Abu Dhabi's 2030 plan. Also, regional exposure across the GCC, including Qatar, Saudi and Bahrain, gives the company an offshore growth profile around the region. In other news, the total assets from Islamic and conventional banks around the UAE has just trickled over to 1 trillion dirhams to the 30th September. This brings the loans to deposits ratio down to 104%, as a combined 8.2 billion worth of provisions by the top 19 banks in the UAE during the third quarter constrained profitability. Going forward, we believe that non-performing loans will continue to rise and provisioning will continue to rise, and therefore remain defensive on the banking sector. In December, we believe that investors will begin to look forward to the dividend season for next year, which are paid in February, March and April. The key stocks for next year that are likely to pay cash dividends include Air Arabia, Aramex, National Bank of Abu Dhabi, First Gulf Bank and Dubai Financial Market. Because earnings are down across the board over the last 12 months, we believe that the remainder of companies may opt to pay a stock dividend instead of a cash dividend, meaning that overall cash payments will be below what they were last year. That's all for this week. Happy investing, Ilarika, and sayonara!